guys. So I wanted to do a recording about price action this week. So here I am, Euro USD daily time frame, and yeah, price is retracing as it seems, because for me, we are in this current dealing range right here. Price is now rejecting the 50% level. And also you can see here it has a overlapping inversion of value gap now, which it's rejecting at the moment. On the other hand, you could also argue that price is still bullish because we have this fair value gap, which is also overlapping with the 50% level. And also there's this breaker, right? Because we broke this low and then we created a high high. So we have a lower low, higher high. So that makes this portion a breaker, this whole area. And you can see prices, remove this one, price is not able to close at midpoint or below the mid-level of the breaker. So, and also it show this, you can see price kind of respecting the mid threshold of this breaker. So those are then on itself bullish signs. So you can argue both bullish or bearishness in this market, but at this moment, as you can see, price is order flow is bearish. Did we break structure? Yeah, we took liquidity with this low, but it's not really broken. Still, in this leg, there's no swing low that's sitting right here. So yeah, and also on the low time frame, there's obviously some form of consolidation. Another tool that we can use to determine direction is the look back, right? So there's a 20-day period, and since we are more focused on intraday trading, we are more focused on the 20-day period. But yeah, so the highest high in this 20-day look back is this swing high right here. I'm only looking at the swing highs, and swing low is right there. So this low is more close by than this high, and since oil flow is already bearish, I would say price is going to take out this low. And also there's still this 40-day low, right? And yes, there's also still this 40-day high that also can be taken out. So what I like to do in these kind of situations is to go to a higher time frame to see if we can what we can learn from there. So here we are on the weekly. And at the start of this week, price looked like this. This is another block. Oh, it's freezing now. Okay, but thank you. So what we see here is I'm order marked out here is the dealing range, right? Because this low took out all this sell side liquidity, then price took out here this buy side liquidity, which is a very big wick, and that to me is then the dealing range. But notice that price did not close above this high right here. It took the liquidity and closed way below the high of this wick. So that's not strength, that's weakness. Also, we took these equal highs right there, and here we have kind of a consolidation, and then here we see a displacement candle lower. So those are signs of weaknesses. Also notice that this candle right here touches the 25% level and also takes out previous week's high and closes in this candle's range. And obviously this candle did not take out this high, but did close very strong below the previous week's low right there with this bearish candle. So there are the bullish or the bearish signs. What I also can argue is that we have this mitigation block right here. As you can see, price is respecting the mean threshold to the pip, so that's bullish. Also, price is not able to close below the 50% mark. and we create a swing low formation, but we also create a swing high formation right here. So what's it going to be? What else can we see here? Yeah, obviously this fair value gap, of course, but this is a significant fair value gap. I would say no, because this fair value gap did not really take out liquidity or whatever. It's just a big candle and then a big rejection candle following it. Um, so therefore, yes, there are bullish signs. It is rejecting on the 50% level, but did it really take out big liquidity? Because now these orders are taken right here. They now need to offset those orders. And where are they going to offset those orders? Well, it makes sense to me that they can offset those orders to this low. They took a bunch of orders. There's no intent of going higher. You can see that here on the consolidation. So yeah, and also here's also a rejection of the 25%. We took out all this liquidity, all this buy side liquidity is now taken, and then we are ranging. So we're now accumulating orders to offset those orders, probably on this low. So it might look bullish because also down close candle supporting price, but the narrative is different, and I think the narrative is more important than what the candles are showing. Also, notice this candle is this is really displacing lower. This is candle showing intent to go lower, and this was just an internal and an inside candle, not taking high, not taking low. So yeah, so now we kind of have to establish that we are bearish, mainly because we did not have a strong close above any of these highs actually. This high doesn't have a strong close. No, this one obviously not. No close above here, no close above here, no close above here. But we do have a very strong close below this low. And we do have all this liquidity taken by this big candle. And I'm just curious now if I measure this quick. Now price was not able to touch 50%. It was traded just a little bit through the 75 of 25%, whatever. But yeah, so no, price was not very strong here. And now we see this big bearish candle breaking this low with speed. Yeah, so those were the signs for bullishness, bearishness, I'm sorry. So going back to the daily, then with that in mind, we can then look for bearish signs. So we established price probably wants to go there because of this big liquidity grab. So price is now hold into kind of consolidation in this area right here, with this value gap and this breakout. And you also see right here, price is failing to push price higher, right? So if you take the longest wick, this was this wick right there, you can see price kind of is respecting the 50% of this bigger wick, and bodies are kind of closing at the 25% level. So yeah, no intent to go high. This is a fake move, respecting this bigger wick right here. And now price trades down. Also notice this bullish value gap that's resting here is now used as the resistance to push to send price lower. Here took out this low swing low right here, so we had a very slow move to the upside. So that's this one. So when price took out this low right here, price closed back in the range. Then price goes up very slowly. All those previous days lows are not taken. Then we are touching the inversion of value gap. So this is now an inversion, right? Price is not able to put bodies in here. It rejected it here, trade up once more in here. And then we have Friday. Okay, let's see Friday. Can I go to the next? Okay, then we have Friday. Okay, so that was last Friday. right? And the price again did not close in here, but look at the candle, there's another inside bar, right? We did not take out Thursday's high nor Thursday's low. So what you would expect for this week then, I suspect maybe take out some liquidity here, and then price would probably continue to trade lower to take out this low. Well, and when we go forward one candle, well, that's Monday, big displacement lower, really going towards this low right there. So I'm just curious to see if there's maybe an entry that you could have on Monday. Let's go to the 1 hour and see where is right here to, let me see. This is London open, London close, right there. And then there is, let me see, where is it? I'm doing something wrong. So 2 to 5, make too big, 5, and then from 7 to 10, like so. Okay. Let's see what we have in this area. So here is Asia, we have this correct move up, we take as high, go low, go up once more. So this here, but not, there's no real good entry in, this is not a nice price actually, you don't want to be involved in this here. So Monday, I would say no, there wasn't really an entry there. So let's go to Tuesday then. Tuesday, let's see. Oh, this was Monday. Up. I was looking at the wrong day. My bad, sorry. So this was Monday. Let's make this to 2 o'clock. Monday ready. Okay, so you have this confirmation, you have this very healing range is created right there, right? Because in the 50-minute, I'm using this high, I would use this high to this low. I was rejecting, and there's a very beautiful value gap pressing there. I like that. It's a very nice one. Look how the mean threshold is very close to the 50% level of the dealing range. So this is a manipulation lag happening in London. London goes down, London goes up, rejects the 50%. Here we have a breaking market structure with speed, with three relatively nice candles. So this is the breaker, and maybe let's see in this area if there's an entry maybe on the low time frames. Yeah, maybe this area right here. Ah, beautiful. Yeah, it's a very nice entry here. Just before, look at that. So we have accumulation, manipulation, distribution, reversal, entry. So how you could have played this is just by entering a short, maybe this candle. Stop loss, I would set my bottom side, because this is your, it's also a dealing range, right? Dealing range high, dealing range low, because we took the buy side to the sell side, and aim for at least this right there. No hanging target, no food, 1 to 3, very clean, very nice trade. And you see when it takes out this low, it consolidates a bit, and rejects from 25% level, and then drops lower. And also on this 35% level we see is this 5-minute value gap. So yeah, this is nice. It's a very clean and perfect entry. This is classic. This is very textbook entry, if you ask me. So that happened on Monday. Okay. Then there was that entry. Then we have Tuesday. There's another big sell-off on Tuesday, and I think this is just selling. You can't do anything in here. Just let price go and let it do its thing. Look how many black candles. It's really in a hurry to get somewhere. So here's Tuesday. Then at the end of New York, there was this reversal. Um, but I'm curious though, on the high time frame, did it take out major liquidity? I'm not sure. Yeah, it did. So this is major liquidity, right? This is buy side liquidity, sell side liquidity, sorry. So this is the sell side, sell side liquidity, liquidity. Okay. So let's see on the 1H. So this is major liquidity that has been taken. And on the 15-minute maybe, I don't know. Yeah, so now no, I'm not sure to be honest. There's no trade you could take for in the regular sessions, but yeah, that is not correct. It should be 10, like so. Right. Then in the longer close, you could have traded it, right? Maybe a little lower time frame, I think. This is a perfect rejection. Then we break this high here. Price comes back, use the sell side liquidity area as support. There's also some other block wrestling in here. I don't see any value gaps. Oh wow, this one. What's this one? This one. Perfect. Perfect inversion to value. Look how this perspective in the main threshold into consequent correction. So, but this and target would be I would target this high, golden high for liquidity. So yeah, not so much of a trade, but yeah, it is possible. So that was then Tuesday. Not sure what happened there. Let's go to Wednesday then. So this is pretty tricky, right? Because now this sell side has been taken on Tuesday. So what do you expect on Wednesday, right? Do you expect a continuation lower or do you expect a retracement? So this is such good. And also look, it did not close strong below this low, right? There's a rejection. The total soup has now taken place. But we also now price go from external liquidity to internal liquidity. So when you go, for example, I don't know, to the 4H maybe, let's remove this. We can now draw out this dealing range from this low to this, from this high to this low. And there's this beautiful value gap actually right here. And also lining the mid levels are perfectly lining up. I want to trade higher, bullish to this level to then expect price to reverse. It's tricky. Yeah, it's tricky. I sometimes do that, but I'm not sure if I will do it here. Let's see. Okay, so this is why it's making crazy. Okay, so price is going off very slowly, and as you can see, we are here in another dealing range, right? The 15-minute dealing range right here. This high to this low. I make this blue. So in here, price is responding from this value gap. There's a close proximity of the 75% down. So let's see what happens. What time? Oh, it's not right time yet. Okay, so this here is the start of New York, right? For London, I'm sorry, London. So London is now open. London goes up, creating relative equal highs, and that's also at the 50% level. So I'd like to see price trade more above the 50% level here. No, it does not do that. So instead of trading above it, what you can see now is price is rejecting the 50%. So we have this. I'm going to move this one to this one. So what we have is we have this value gap now. Again, look where the mid level is closing, where the mid level is overlapping exactly with the 50% level. This as minus 15. Oh, I want the hourly chart. Oh, I'm sorry. I was in minus 1 hour. Look where the bodies are closing. Just a little mohawk, but these bodies are way closing in the upper half and rejecting it. And here we have a breaking structure here. So this, to me, then in New York it is. So makes sense, right? London makes the fake move. We go low, we go high. We're respecting this 1 hour value gap. Then we have displacement leg lower. Price comes up. Open midnight. Yes, the midnight opening price of this day. Rejecting it. So this could be a very nice short opportunity. What I like to see now is price overflow bullish. This order block is holding right here, as you can see. I'd like to see price take out these highs, go in the premium once more to get above midnight opening price, and then look for kind of displacement low. Okay, so here we have a little wick, even better. Price close low, and now this could be a short right there. Stop loss ideally here, but maybe this is also fine above midnight opening price, and target. Yeah, what would be target? At least some 1T2. But I don't like X. Are honest, I like to. Okay, so this value gap. There is this. Okay, this portion is a balanced price range. So yeah, midpoint. I guess it's fine. Maybe we miss the high. Is it touch 1 to 7 also just fine. We'll go back to the 5 minute. Price is not going to tag me. That just goes straight to my target. Okay, that's fine, but that was an opportunity. And maybe it was, maybe it was on the 1 minute. Better than, yeah, the 1 minute I was better. So when you notice this, equal highs are taken, then we have displacement lower, really displacement. We take out these highs. We have also better steering range here. There's this value gap, there's this value gap. So here your entry would be here. Stop loss above the highs. And this is where you get tagged. And like I said, then you target this for a very nice 240. That's a very nice trade. Okay. So price is now reacting from this balanced price range. Let's go to the next day because New York is now over. Let's go to so we are now, let's see. Oops. So price took it on Thursday, right? We were based, we saw Wednesday, this was Thursday, right? You can see. Took this trade on Thursday, yeah. So if we go back to the daily, and this is today, cut today. So okay, so now we're on Friday. Price made this massive move down, took out this low, closed back. Yesterday it did the same thing, took out previous low, closes above here. So what's it going to do today? Is it going to displace higher today into this range? Based on the daily time frame, to be honest, I don't know. Right, because for the daily time frame, I would say it's probably it can be go upside and feel some imbalances here and then go lower, or the momentum is so strong we go lower today. So going to the 4 hour, not very clear. Let's go to 1 hour. All right, so maybe 15 minutes. Yeah, because here I got my session annotations. Let's use this one. Maybe extend it forward. Yeah. Okay, so today Asia is a small range consolidation. But what was significant for me was the way Asia was broken, right? Or anyway, this swing low was broken with speed, with intent. Afterwards, price came up slowly. It kept respecting this divergence value gap on the 15-minute, which is in the lower half of this 1 hour value gap. And this 1 hour value gap was, if we have the yield range, no, it's not this yield range, which sure what it was. But anyways, for me, this is the current yield range we are in. And the 15 minutes, so we have this high. I took out this buy side liquidity, and then we went lower, take out this low right here. So this high, this low has been taken, therefore this is my yield range. And this is all internal structure. Price came up. And as you can see, there are multiple PD arrays in play here. Obviously, there's this big initial value gap. Let's see what happens if we throw this one out. I don't see that much in here. No. But yeah, so let's take also then 1 hour into consideration. Or maybe we need to use this. Okay, you can just see that this value gap is actually significant. This one. Just figure out how yeah, so this would be my 1 hour deal range also. And what you can also see here, what do we have? This is a order block, right? Big one, but it is still very long. There's no inefficiencies except for this one. Also in the 15-minute. No. Not really interesting. Okay, anyways. So for today's price action, we have this big, this is significant. Why? Because we took out all this buy side liquidity here and here, and this was a strong move to the downside. Then price came up into this bearish value gap again. This is very easy one to spot and to see. And if you move this one, and we're gonna, and this is a leading range, right? Because it took out all these highs. And this one is overlapping with the 75% level. So a wick above it, we take out this high, close back in the range, but look where we close. We close at the 50% level right there. Then price comes back again into this inversion, in this bearish value gap, and touching the consequent encroachment, and then we leave the value gap and also closing below the midnight opening price. And that's basically why I based my trade off today. I noticed this, I think some of the 5 minutes. Then I saw the displacement, price went up, price was rejecting. I think I took my short right there. Short. I think it was somewhere here. Stop above this high right there. And my target was the 15-minute rejection block. My target was this right here. Yeah, rejection block. And as you can see, this was a very nice trade I took today. I think this was my best trade of this week. But yeah, reasoning for me to take this trade was I wasn't sure about the daily, how the daily would form. So therefore, I looked at the intraday price action and see how price was reacting to certain levels. So obviously, price overall, high time frame is bearish, right? It's no denial in that. So price was just very bearish. And then I noticed 15 minutes. This move for me was significant. This was my most important clue for that price would go down. We have a very strong move going lower, breaking this low, which also has to be Asian low. So that was my signature to look for shorts. And then I noticed this fair value gap. And you can see how price is respecting this fair value gap. It's really using it. The way how bodies are closing, how the wicks are closing is really telling you that the algorithm is using this fair value gap. It's really referring to this fair value gap. And then on the 5 minutes, I didn't go to the 1 minute today. I just noticed, I think it was this, I can't remember exactly, but I think this was somewhere in here, halfway in New York, halfway London, where I took the trade and just sold off, also in lunch, and finally it did my TP. Okay, so this is an NFP going on right now, I see. Which makes sense. Yeah. So that's basically what I did, right? I couldn't figure out the daily candle, so I based my bias based on the lower time frame. So how order flow was going, how was price reacting, what did he do, all that kind of stuff, and that's how I based my trade off. So I hope you enjoyed it, and until I speak to you next time.